Afternoon, everybody. We're starting here in just a moment. All right. Welcome, everybody. Welcome to the stream. I'm going to do a shorter stream today. We got Tesla earnings. I got to get some water. I forgot to bring my water in here. Guess I'll talk markets here. I'll get my water. Zoom. All right. How's everyone doing? Welcome to the live stream. What's up, Remy? What's up, Tom? Ahmed, Chris, and Horsine. Sweet. Dubs. What's going on, everybody? What's up, Palm Tree? Oakley, Dokley, Artily, Chokleys. Let me just post this little pinned comment stuff here. This is longer than 9 seconds, yeah. I always have an error with my streams. This time it was me not making it whatever, something to do with like not saying it's not recommended to children. If I do that, it cuts chat off, and I always forget to update that. All right. Good afternoon. Good afternoon. I just got to post this in and pin it up. Pinned. Good to hear, Palm Tree. Good to hear. Good to hear. Cool. So we're getting a little bit of a bounce here in the markets. Everyone was all freaked out yesterday, right? The world's ending again, and now the world's better. Then we get the market to fall again. It's the market world's falling apart again. Oh my gosh. What's up, Meep? What's up, Wolf Banter? So it's been crazy. It's been crazy. Let's take a look here at markets just currently, and then we'll look into expected moves. We'll go into individual stocks if you want to drop those in the chat. Market so far right now, SPY is up a little bit off its highs, but not too far off. We're up to 2.5%. This is most likely, I don't want to jinx it, but a follow-through day. So if you're familiar with the work of William O'Neill, they would consider this a follow-through day. We'll talk about what that looks like, okay? So market net flow for the day has been bullish for the bulk of the day, right? The green line go up, red line been going flat line. You've had convergence for the bulk of the day. We've lost a little convergence right over around here. We saw the market kind of come off a bit, and then we started to gain convergence back, and the market started to rip higher. There was some very interesting stuff going on from a tick standpoint that, if you're in the Discord, we talked about that in the day trading pit, something that I called out. I'll walk you through that, something that maybe, if it happens again, you can keep an eye on it. It's a cool way of reading the tick chart. If we take a look at expected moves for the day, we're well outside here of the daily expected range, but we've kind of just been doodling in and around it. We're still below a declining 5-day moving average, right? So the market still got to prove itself. Obviously, one day doesn't change necessarily the trend. And, well, we haven't changed the trend yet. So market still has some some work to do. Right now, where are we as far as the week to date goes? We're unchanged, right? We're unchanged on the week. This is where we closed last week. We opened, we saw an oversized Monday move. So if you watched last night's brief, we talked about how typically, Mondays have outsized type moves. And we showed that, 50% of all the weeks this week had an outsized Monday move that hit into the weekly expected move or the implied move. So it came down here, got outside of the quarter date. We saw a little bit of a ramp back. You know, when you look at these 15-minute charts, it doesn't look like anything, right? It doesn't look like much, but that's just because we're in a very volatile environment. So you see 2.5% up. Yesterday, you see over 3% down. You get worked up about these type of things. But if you step back and you understand where we are as far as market structure goes, where we stand within the realm of gamma, under the flip line, above the flip line, this is normal stuff to happen here in these markets. Okay, so there's SPY. If we take a look at the Qs. Update you on that one. We're still below the declining 5-day moving average. We're doodling around the quarter-to-date volume weighted average price, and we're slightly there above the daily's implied zone right now. We're well above the weekly volume weighted average price here too, which is nice, and we're slightly up currently on the trading week so far. Let's take a look at Gamma. There's a big level here, and that's 5,300. We actually came in and we tagged that 5,300 today, right? We got outside of it right over here, and we started to pull back in. Now, earlier in the trading session, 5,300 was one of those levels that there was a lot of focus and attention on. And, we were talking about the tick chart, and you can see here that we started with a pretty high tick reading intraday. And we came in, right, we didn't close below the zero line. This right here is the zero line right through the middle of the screen. And you can see we didn't really actually have a close under the zero line up until around here. And that is, about an hour or so into the trading session. We've tagged it a few times over here. But the reason why I found this to be important, especially for a day like today, was because yesterday, it was the same situation, but to the downside, right? We started with a low tick reading. We had, it go kind of sideways here with, underneath the zero line. This is the zero line right there. And we didn't really get back above the zero line until about 7:35. And, if you're paying attention to this, that's an hour of negative tick readings. And these type of signs, when you're reading these low tick readings or high tick readings, can potentially turn into somewhat of a trend day versus more of a choppy sideways day. So, I pulled up the SPY chart and I said, okay, so when we got back above, yesterday, back above a tick reading of 0, it was right here at 740, right? That's what read on the tick. So what did we see? Well, the market was going down. Then we all of a sudden, this was all negative ticks. And then we finally got above the 0, and it ended up turning into a potential opportunity to actually get into a potential short to play it into lower levels. Now, the same thing goes for today's price action. Right? We're seeing somewhat of a trend day today, I'd say, right? A big gap up. We spiked up here to about the gamma wall of 5,300. And now we've been kind of doodling around. And if you look at the tick reading, right, as we just stated, where was it, right? We started well above here, and we didn't really get below 0 until about 7:30-ish. So what did that look like on the SPY chart? Right? Zoom this in. 7:30 was right here. And so we started to see kind of price action go sideways, trend, sideways a little bit after this, and it led to a nice move into that gamma wall over here at 5,300. And, made for a pretty darn good trade. So if you're watching tick charts, this is one way to read it or to add some sort of, benefit to your style of trade, right? It's giving you some decent information here. And this is the NYSE tick chart. There's other people that like to use the NASDAQ tick chart, S&P 500, the IW small capped. I just use NYSE. And you can also implement something like the advanced decline line, ADD, right? This was pretty bullish for the whole portion of the day. This is a pretty high reading, but we were noticing during the periods of consolidations, there was pullbacks here until we finally broke and we started to really move higher. So this is another way to kind of just give you some identifications of market internals, and two of which I like. Most importantly for me, I do like the tick chart because I like to fade extreme readings, especially more into a choppy environment where we're getting a lot of back and forth volatility. But in times like this, I like to try to see if I can hop on to somewhat of a trend. So as it stands right now, we were getting quite a bit of readings up here right above that 500, which is a positive sign. We kind of slipped below the 0 line, but no extreme reading by any mean at this current moment. NQ pulling back slightly over here to daily volume weighted average price. This was actually the low volume weighted average price for today's trading session. And this one right here is the swing high of today's trading session. So it's basically saying even with this pullback here, everyone's in the green based off of that volume weighted average price, that TWAP, that anchor VWAP, whatever you want to call it. We do got Tesla's reporting after the bell. We'll talk about that, but I do need to take a quick step away from the computer because I do need some agua, some water. Okay, what are we doing right now? We're pulling back slightly here. I'm going to go ahead and open this up. Remember, we're still below that declining 5-day moving average, right? So it's not necessarily a great thing. We see us move back if it goes like this and cracks lower. It's not the most amazing sign in markets, but we'll see. We'll see what it wants to bring. I'm going to bring this out here. I'm going to run and get some water. All right, give me a moment. Be right back. Oakley dokley, arty dilly chokalies. I am back. Hey, what's up, DD? What's up, Barkster? What's up, Exotic? Yeah, I know. I just got here. I'm already leaving. I had to get some water. Okay. Let me put my camera back on. Shoo-wee. All right, market coming in a little bit here, settling in. I want to talk here now the potential for seeing a follow-through day in the markets. I feel like if I talk about it, I'm going to jinx it. No, don't be the jinxer. It's like when I get in a rocket ship. What's up, comrade? What's up, D-Wood? What's up, Mark? NQ pulling right back into the volume weighted average prices here that we had from the swing high today, swing low today. Market net flow, convergence coming off a little bit here. Still bullish. And tick readings sinking off a little bit here. I might take a trade if something really kind of sets up here, but for the most part, I'm done for the trading session today. We'll pull up some individual names. But before I do, let's go ahead and go to the daily chart, and I want to show you the SPY or the SPX. It don't matter. Look at the now. Just look at the SPY. Here we go. SPY. Boom. Okay, so the SPY. We got some lines on my screen. They're kind of obnoxious all over the place. I have a year-to-date VWAP. That's purple. We have the 200-day, the 50-day, the death cross. That took place, and then the 20-day moving average, all declining as it stands right now. 200 days rather flat, but. Okay, so as far as what a follow-through day means, right? Like I said at the beginning, if you're familiar with William O'Neill's work, during corrections or bear markets, they look for what's known as a follow-through day. I do the same thing because every correction in the market throughout history and every bear market, the start of a new bull market, you'll always see one of these follow-through days. However, when you see the follow-through day, it doesn't mean that the bottom is in by any means, right? It doesn't mean that. There's about a 50% hit rate, but it does tell you, hey, now's the time to potentially get some exposure back into these markets. And the reason for that is because if it actually is the bottom, right, you can have some exposure and try to catch that ride, and then add in as time progresses and moves forward. So once again, there's about a 50% hit rate of actually finding the bottom with seeing a follow-through day, but 100% of the time, they will be at you can go back to any correction, any bear market in history, there's going to be a follow-through day that came out from the bottom, okay? So you can, if you don't believe me, you can tell me, hey, look at this day, right? And I'll pull it up on, if I have the data on this chart, okay? And I'll show you the follow-through day. So what is a follow-through day? A follow-through day is when the market, right, we're looking at the SPY, you want at least 1.2%, right? You want it to be about 1.2% up on the trading session. You know, the higher the better, right? 1.2% on the trading session, and you want more volume than the day prior. All right, but what's more important here is also when it occurs. So you typically want it from more than day 4, right? You don't want it an early follow-through day like this one, right? That was an early follow-through day right here. Well, I'll talk about it. But typically they happen between days 4 through 7. Sometimes they're a little bit extended out. So how do you count that, right? Well, first you look at the low, right? Here was a low, okay? So this was the low that's breached, and then we start counting, as long as this low is not breached, we start counting the attempted rally phase. So if we're looking at an attempted rally, we'll call it AR, right? We start going, okay, here's day 1, right? So market 1, day 2, market day 2. Okay, day 3 over here, we'll market day 3, day 4 over there, day 4, day 5, boom, day 6, day 7, day 8, day 9, right? 1, 2, 3, 4, there we go. And now we're working on a day 10, right? So this would be day 10 of the attempted rally, and it may be a follow-through day. Right now we're up 2.9% in 2.25%. So this would qualify as long as now volume exceeds the day prior. Okay, so now if volume exceeds this prior day, which it's definitely possible, we still have some time left in the trading session and it's looking pretty good. We'll see. That would be considered our follow-through day in the markets, where you can start to look to potentially get some exposure into it if we are going to actually see more. Now, after the follow-through day, you start to still look at market structure. And what I like to do is still look at the gamma flip line. And we're well below the gamma flip line as it stands right now. The gamma flip line, let me update it, is currently at 55.22. That's, 55.22 is up here. We're well off of that. So this still means that you can see selling into selling, buying into buying, and so forth. And then the second thing I like to look at on top of that, as far as market conditions go, is the directions of the 5-day moving average. And as you can see here, well, we're still basically below these averages. Biotech's in the green, it's rather choppy there. Semiconductors is red. SPY, is still currently below it. Qs are still below it. IWM's seen a little bit of relative strength, which actually is a positive sign to see that, seeing IWM start to kind of firm up. And then the Dow Jones Industrial Average is also below that declining 5-day moving average there too as well. So it's not like the greatest conditions right here by any means, but it still gives us some sort of something to kind of grip a hold of. Now, this would actually be technically the second official day in this follow-through day in this move. Now, if you want to call this a follow-through day, okay, but technically this was not between days, 4 or higher, right? Days 4 through 7 is what we typically leave for, but it was on day 2, right, of the attempted rally, and that came off of some news. It was higher volume, big, huge up day. We've seen some distribution days since then. And then once we get a follow-through day, sometimes the signs that you want to watch out for is if the follow-through day low is taken out, right? If it's taken out and you start to see distribution days, which a distribution day is a down day with more volume than the prior trading session, if those start to add up, it's also not a really good sign, and there's a more highly likelihood that that's going to fail. Okay, so even if we get the follow through today, what am I trying to say here? It's a positive sign for the markets, but the market's still got a lot of proving to do to know that this would be some sort of a low. In yesterday's video, we talked about the gamma versus spot chart, and we started marking out about 4,800 on the SPX was that level that could be more considered an oversold condition, and that would be taking out really the low of SPX if that was the case. We talked about CTAs and how CTAs are now in a up tape, down tape, flat tape are going to be buyers, not by a large portion by any means, but we will start to see them become buyers versus sellers, and that could be a positive sign too. If we start really breaking from some key levels, they can become a big help to seeing the market kind of recover. On yesterday I tweeted out something kind of interesting about the pain trade. And I want to kind of walk through my thoughts here on this. Let me bring up the tweet so I don't butcher it because I can't really remember what I said. Let me see here. Okay, I said, I don't think that the pain trade is the market hitting a new low. I think that it's missing an S&P 500 move back to flat year to date, which would be kind of back up to here. So I actually think that missing this move would be more painful than taking out the low. Now, careful here. Like I said, by the way, read this carefully because both can actually be true. And the reason why I kind of think that would be more of the pain trade is because we've already had institutions and hedge funds. They've been net sellers. This is according to data from various banks. Bank of America is the one that I pulled from. And retail has been actually net buyers through this entire rally. So this sell-off. So as the market's been going off, why would I think that it'd be more of a pain trade to go up higher? Because if we were to kind of head lower and retail was, buying this entire move, right? And they keep on getting kind of sloshed around in volatility, when volatility arrives, right? When it shows up, when it raises its little ugly head, narratives, tend to get a lot louder, right? You get, no, this is happening because of this and because of that and this and that. Honestly, if I didn't have any news source whatsoever or anything, I could tell you that volatility was going to increase without any narratives just because we flipped under the gamma flip line, right? I can prove it, right? This is something I've been tracking for a while here, right? These gray shaded boxes are when we go under the flip line, and you could see it gave me a heads up shot over here into August, gave me a heads up shot over to here, it gave me a heads up shot to all this volatility, which we cross under on February 21st. And if I show you what was February 21st on the S&P 500, it was this day up here. Imagine being able to know when that might happen. And during this whole entire time, we were talking about as we break up to all-time highs, there's a possibility that we could be setting up for a massive bull trap. Did I think it was going to be to this extent? Nope, I didn't, but it ended up being. So, at least we had some sort of data there. I went off track there. What was I trying to say? Help me remind myself. I was talking about the pain trade. So why would it be more painful? Is because if they've been buying, and all of a sudden get sloshed out of their position and it rips up, chances are that's going to be a lot more painful than just taking out this low over here and trying to buy lower, right? So my point is, it's going to be, you got to be patient here, because if this takes out the low, huge opportunities are going to arrive. But even after this sell-off, there could still very well be huge opportunities in this market. So it's important to look for names that have been showing relative strength, because if the market does want to turn back around and start heading higher, guess what? You can see a lot of these strength, or the leaders that have been leading out of this start to do significantly better. That would suck, right? It would suck if you're buying this entire dip and then all of a sudden you get sloshed out and then it rips back up, and then what? You're going to buy it up here, and then what happens? Oh, you get up a little bit higher. You don't know whether to enter this big move to the upside if that were to occur. What would be the emotions that a regular retail trader would feel? right? Well, now, no, it's going to turn back down, but then it keeps going higher. Then all of a sudden they capitulate and they start buying up here. And then in 2026, we get more volatility and things start to roll right back over. You know, it's a narrative, but that is why I believe that would be a more painful trade than just actually taking out this low, to be quite honest. And like I said, both can be, in theory, true, but I don't want to base it off of just saying, hey, yeah, I know we're going to come down here, so I'm going to short right now. Or I'm going to wait for it to come down here, right? I'm not going to do either. I'm going to trade the market that I currently have and try to play the opportunities that I see. So we'll talk about opportunities in the market. If you want me to pull up individual names, drop them in the chat. I'll pull up some of my names from my tight list. I'll go over a couple of trade ideas that I recently posted, see how those are doing. Let's take a look here at the markets really quick. SPY pulling into its vol range. We've been kind of there all day. Since it got up to this lower upper vol range. Go back over to 2DTE Gamma. 52.75 looks like that kind of pin right here. And we're basically right in and around that 275 on SPX. A little bit slightly higher here, just slightly under that. And we're kind of just doodling around here as we're approaching market close, where we'll get the Tesla earnings report. Jibidibidoo. All right, let me go back over to Twitchy. Gamma flip line, how's it calculated? I wouldn't be able to just tell you in a quick little couple sentences here. It's taking a look at Gamma as a whole. It's looking at various strikes throughout the net Gamma of. Let me pull it up. It's looking at all these strikes here, and it's basing the calculation based off of all of that. So you can probably just go into, like, if you want the exact calculation. I mean, it's done differently, but however you aggregate your data, it's going to be differently, right? So there's going to be services that say, hey, my Gamma flip line is at 52.50. Hey, mine's at 52.22, right? So it's more, in my opinion, it's always been a zone, but I feel like this service, the Gamma Lab, has been pretty spot on with it. According to the other services that I've been looking at, and they're kind of all within the same range. So I just watched one of them, and that's Gamma Lab right now. Okay. Explain the tick again. I would just do a quick Google search on tick charts. It's a very simple explanation of what tick is. I want to go into some individual names and stuff as we're kind of coming more closer to the closing bell. And I can tell you always, kind of how I look at the tick chart and so forth. I don't typically utilize it too much in the early morning session or the late evening session. And the reason is because you can see obviously much more volatile markets as kind of volume piles in the early trading session and then later the trading session. So whether you wait 15 minutes, 30 minutes, an hour, whatever your cup of tea is. And then also the flip side would be do the same length of time towards the end too as well. There's opportunities with it, both sides in both directions. But yeah, tick's chart right now is coming off. So I don't know when you posted that message there. And then the SPY is just coming back into its vol range. So we moved up, we came in, that was a lower high, and we're pulling in a little bit here as we're still below that declining 5-day moving average. Let's pull up some of these individual names. Boom. Okay. Let me see here the names that we got coming through. We got Hood, Netflix, Palantir, Spot, MicroStrategy, Tesla, departure from Doge to focus on Tesla. Yeah, Ty, that's a strong possibility there. I'm kind of leaning bullishly, but I just don't have I don't have I did a small Tesla position yesterday, and I was kind of leaning bullish, and then I got out most of it today. I'm not really willing to risk anything going into earnings because I don't know what's going to come from it. I'll have an idea of the expectations of move, but that's about it. We'll look at we'll look at Lockheed Martin, we'll look at Monster, we'll look at Roblox. Okay, we're gonna look at these daily time frames here. Okay, so Comrade, I'm kind of feeling the same way that he might say something like that, but I feel like that now is more of the popular opinion too, is that he's gonna say something about stepping away. And I think it's actually kind of necessary at this point to rally the stock, because I don't think the earnings are going to be that great, but perhaps the guidance and the future might be very good. So it ultimately depends on how the market interprets it, right? Okay, let's pull this stuff up. I'll go hood first. The hood. And I'm going to go quick. I'm looking at daily charts. So I want everyone to remember that there is earnings right around the corner in a lot of these names that we're going to be talking about. And that poses a threat, obviously, because it's binary. We don't know whether it's going to be good, bad, right? You can be the best fundamental analysis person in the world, but the problem is you still don't know what the market's going to do, right? So you can be... Besides the point, the best way that I know how to determine things is by looking at the potential risks that the market price is in. So you look at the expected moves as we near closer to those dates, right? So as it stands, I just keep that in mind while I keep continuing to go through some of these names. So as it stands right now, we're above a rising 200 day. It could be a potential, little double bottom play right here is if we start getting back above 50. What we've seen here is a nice move higher, and we see some consolidations. It's still below year-to-date volume weighted average price, and the 50-day is starting to decline here. So overall, I mean, it's holding up right now as it stands, but it has a little bit of proving to do, right? So what I would like to see is obviously it kind of do something like this and break back through here and have the 50-day to start turn back around and reclaim that year-to-date as well to potentially start breaking through and taking out some of those key levels. Now, is that going to happen before earnings? I don't think so. Maybe, right? But it's hard to say. So when earnings comes, if we get a nice big earnings move, I would like to see something consolidate and then try to play, if the market's going to be, giving us better signs, play something like that and try to come reclaim these highs, right? I'm not much interested in playing earnings. It's not my cup of tea. I'm looking at the NYSE tick. So on Thinkorswim, Steve, I'm looking at NYSE tick. NYSE tick. This right here. Okay. NFLX. Netflix is showing a lot of relative strength here too. So this is one that I'd be waiting for consolidations. This has just hit a new high, right? So it's not bullish when you hit highs, right? New high on the year, new probably all-time high, I believe so. But from down here to up here is a little bit strong of a move for me to just be like, yeah, I'm going to enter right here. No, I'm going to wait for it to consolidate, right? So we're coming back into a prior area that we had supply. So perhaps maybe it comes in a bit, it does something like this and starts to give us a better opportunity to actually trade something more to the upside. But right now, right, as we know, one of the basic principles of technical analysis is stocks move between contraction and expansion, or expansion and contraction. And right now we're in that expansionary move, boom, to the upside. So now I would prefer to wait for the contraction, see how it consolidates, and gives me a little bit better risk to reward opportunity. Palantir. So Palantir looks pretty good here too. I'm going to clear this drawing set. We do have earnings not too far around the corner. This one's been holding up rather strong, right? Nice big kind of reversal candle here. Had some follow through. And now price action is getting very tight. We're above the year-to-date volume weighted average price. The 20-day is starting to kind of flatten out here. We're above a declining 50-day, but in my opinion, that's more, more neutral than anything. And we're kind of just consolidating right in and around this $100 level here as earnings approach. So this one, it does look good. You might be considering this somewhat of a double bottom. We're getting tight on the right-hand side. So if we can break 100, maybe that opens the door to, come restrike this gap and potentially even head higher. Like I said about earnings is around the corner. I don't like earnings plays, but if we see a strong move, I would be looking for the consolidation and see if we can play into the follow through of it. So also another name. Spotify, also another strong name out there. You can see that I've been watching this one here, kind of coming into this declining trend line. We do have lower highs. We do have a lower low. So the current trend right now on just this small price action is down, but we are above a rising 200-day. Our 20-day or 50-day, those are kind of neutral. And in the year-to-date VWAP is currently above it. So if we start breaking below the year-to-date volume weighted average price, I pretty much have no interest in it until it turns back around and starts actually breaking through this level. The stock has moved far and fast. Okay, so this could be one of those more wider bases that's building out and requires a little bit more time and a little bit more consolidation. But overall, this would be a name that would be high up on the list, looking for consolidations and in plays to take out some of these highs and you know, to prove itself to continue this trend. Okay, so Spotify, yeah, definitely that's been on the radar for a while. GME, GameStop, I think that this is more of a stock that can be in play at times to trade. We are above some key levels, right? The year-to-date VWAP and so forth. Price action kind of went sideways here, and we're seeing a little bit of a pop. But overall, from a year-to-date perspective, this thing has not gone really anywhere. It's slightly down on the year, but it's been holding up. If I look at the week-to-date, what do I do? How do I trade this, right? Typically, what happens is you try to trade it for a squeeze play, because that's pretty much all you get out of it is things build up and then you get some sort of squeeze, and you typically end up having to sell into it at a point. So this is more of a shorter term trading stock when things set up. I like to look for these contractions, right? So and I'll go back to over here when we talked about it and when it was a trade idea. It was right here, right? So price action went up higher and then price action contracted really nicely. Volume dried up, and this right here ended up becoming a trade idea, because now this is what I like. I have small risk and potentially good reward. What happened? The stock ended up squeezing. Jeez. You can see it was from here, and then we saw that big squeeze to the upside. Same thing goes back to when it was happening in 2021 or 2020, whenever that took place. I kind of forget. As far as gold goes, gold's coming off a little bit here. I'm not surprised. I did take a short position in gold. I mentioned kind of on the breach last night is how, we're reaching kind of a parabolic move here. Let me see, what did I do as far as the chart goes? I kind of drew out like a trend line like this. I forget exactly how. I think it was more data. And then we kind of went into this parabolic fashion. And when you see these type of moves, yeah, they're gonna consolidate. They're gonna pull back. That's just what happens. So most people are like, and it came up to 3,500. So it actually did reach up to the 3,500 part, which was a level that I was eyeing in on. But yeah, gold's kind of coming in overall in a very bullish trend, right? So what's happening here? Is the dollar up today? Is that what's going on? Is that what's driving it? I wouldn't be surprised to see the dollar up. Let me see, why isn't the dollar chart loading? Do I have to do dollar sign? There we go. Dollar's up, right? And gold is down. There's a strong negative correlation here. And with the dollar falling this fast and this furious, it's going to bounce. And when it bounces, right, that's typically going to put pressure on assets that have a negative correlation to it. So if dollar wants to bounce back up into this area, which would, that'd be completely normal to see a dollar bounce like that. Gold gets pulled in, right? At least that's, current correlation would suggest that. Gold would pull in. But that doesn't mean that it's game over for gold. Right? The dollar could just be bouncing before heading to another low, which would mean what? If the correlation holds, gold can still potentially head higher. But you don't want to chase the run to the upside like that, okay? So yeah, we're coming in a little bit. We could break this high, right? Like I said, a new high is not bearish, but sometimes the move leading up to it, people would fade it and and what I like to do is wait for now the consolidations and new setups to potentially try to go long, but I will not long, up here, right? After a strong move. I just don't do that. If anything, I would take the reverse and I would fade it given the current context of market conditions, which we hit on basically every single market brief. MicroStrategy. Yeah, MicroStrategy's been looking pretty good. Just a nice consolidation, and we're kind of breaking out of that today. That's the daily time frame, about 7%. Yesterday's brief, or the day prior, we talked about the Sailor to Shift tool. It still hasn't given me the signal yet. It may actually today, but I wait for the weekly close there, right? So some people front run it, some don't, but it was looking like we could start to see things change here from a crypto perspective, from a Bitcoin perspective, and MicroStrategy, I would imagine. I haven't even looked at Bitcoin today. Yeah, there we go. Well, I guess I did look at Bitcoin. It's coming into its year-to-date, this is Bitcoin futures, and it's up today. Oh, go figure, right? Strong correlation between the two assets, positive correlation between those two assets. So yeah, Bitcoin's up, Bido's up, right? And MicroStrategy's up. So I'd imagine Coin, right? Coin, is that up? You're dang straight it's up. It's up 7.81%, which happened to also be, I believe, on the tight list this week for those that were paying attention to that in the Discord. Coinbase was one of them. Price action was getting tight. We started to see early signs of a potential signal flip on crypto. And now we're seeing some nice moves in the crypto market coming out of that contraction that gave us a good risk to reward. So Coin looks good. MicroStrategy, right? Breaking out. That's, good sign for risk on assets, right? Sometimes crypto leads some of these risk on assets, right? Not all the time, but some of the times it's been known to lead things. Like you might even say that crypto found its top, I believe, before some of these markets. And that's a good leading indicator, I guess. Okay, let me see here. What else do we got going on? Yeah, Tesla's reporting after the bell. Tesla is beat to smithereens, which is one of the reasons why I became kind of more bullish on it, because I feel like Elon's going to have to say something that the market wants to see this thing kind of levitate up. I don't know, though. I really don't. Am I willing to really risk that kind of money on it? Probably not. But I did have a little bit of a trade today, and I basically exited the majority of it. And if it goes in my favor for the remaining couple shares, cool, whatever. If it goes against me, what do I lose? I'll probably lose roughly around $28 to $30 a share, which sounds like a lot, but honestly, or even if it was 50 to 60 bucks a share, it doesn't actually make a big difference to my portfolio because I've already cut the size overly dramatic. So I'll decide whether towards more of the next couple of minutes here, if I want to even just potentially just cut the dang thing. I'll probably end up holding it, just because I don't even think it's 1% of my portfolio now. It was probably about 3%, and because of the context of what I was doing, 3%, and I cut it down. I guess I can look, but I don't have it up. Down to not even less than 1%. It's like nothing. Okay. Let's see. Yeah. LMT, Lockheed Martin. So more of a defense name. I mean, it doesn't look bad. It's actually kind of firming up over here. So right when I see Lockheed, so it reported earnings. So that's out of the way. So notice how the 50-day was been declining here. Right now it's starting to kind of converge with the 20, the year-to-date, and you can see kind of right here, they're starting to slope up a bit. Now we've got earnings out of the way. Maybe that's a good sign here. Now, I would be more bearish if we start breaking down today's low. So if you're locked in here, you're entering, my stop would be down here. And if you wanted to give it more room, okay, maybe this low down here. And then the potential area we don't want to watch out for is, that 200-day or potentially filling this gap up here. So kind of in this zone. But if it can get up to there and maybe kind of doodle around, build a base around that psychological 500 level, hey, maybe that's a good sign here to start seeing a build back over here. It's been very, very volatile name. Big moves to the downside, big move to the upside, big move back to the downside. So pick your levels kind of carefully and just be aware of that volatility. But it is nice seeing the averages start to turn back up, start to reclaim the year to date. That's a good sign from a more medium term perspective. Celsius, I believe Celsius was also on my tight list. Let's take a look at Celsius. Yeah, it was on my tight list. Celsius, let me remove this. Let me zoom in. We got a little bit of a ring there. That's a tick reading. So we just probably got let me see here. I just want to give it a shot. Yeah, there we go. We're getting a tick reading of over 1,000 with about 20 minutes left to the close. I don't know. I don't like to do that. Do any sort of fades or anything like that with such a small amount of time left in the market. We're talking 18 minutes, so things could get crazy. But if we do stay up here, I mean, it could cause squeezes in these markets. You can see that we're kind of pulling back into that roughly declining 5-day moving average. So I'm not looking to do anything specifically there, but I just figured for maybe that they can look at that. Let's go back to Celsius. So Celsius also coiling up right over here, consolidating its big move. The 200-day is still declining. The 50-day is starting to turn up. It looks good. It does look good. However, I would prefer, it to kind of like pull back in and for this to actually flatten out a little bit more and give me something more tangible to kind of grab a hold of. Because if I enter here, yeah, it could still go up and this could start eventually turning back around, but I would actually just prefer kind of wait it out and see that actually happen, because it just hasn't happened yet. And this thing took obviously a big spill. We saw a big reversal over here from a weekly perspective. We're seeing a 30-week turnaround, which is roughly the 150-day moving average. The 10-week is up. That's positive. So we seen early signs, and it's very possible to see this thing back up above and retest these, the back end of these lows over here. Once it was support has a possibility to become resistance. So retest of 50 at some point. Yeah, sure. I wouldn't put it past something like this.
Update for Accenture and Booz Allen Hamilton. The tickers are ACN.
We'll take a look at
these consulting firms offer up to a combined $20 billion in
AMD.
savings to federal contracts, according to the Wall Street Journal.
Yeah, AMD has just been in a significant downtrend. Yeah, like you hear that thing just kind of ripping back and forth. That's why I didn't really want to fade it, because you can kind of get those squeezes, towards the end of the day, which would be something that I potentially would have traded to the upside, but just too little time right now. Okay, so yeah, AMD, it has a lot of time to prove itself, right? All these lows, they've been broken. We've seen moves higher and so forth. So it's just in a downtrend. It's going to take a long time for this to heal. Can we see a shock of the market and rip it back up to the 200-day? Yeah, but even if we see that shock back, are you going to be selling into it? Because it is still declining. It's going to be a long time before you see this stuff start to turn around and actually have more of a positive trend. Simply put, this thing is in a downtrend. It's been well an established downtrend, and it's been coming off. So you can play little pockets here and there. Maybe when we're above a rising 5-day, you can catch some nice moves and so forth. I think that there's going to be opportunities to do so. But as far as like investment style, like you're going to hold it, it's just too dangerous for me to hold a name like this, given the context of just massive downtrend that it's in. Lower highs, lower lows, declining averages all around, below the year-to-date VWAP. Like, give me something more established that I can actually trade. From the shorter perspective, right? If you see this big reversal candle, you have price action kind of coiling up here. So to see a pop back up, cool. You can play shorter term, but you'd still be fighting the trend. So you just got to be aware of that as that happens. Take a look at HPE. We'll take a look at AMD. HPE and Carvana. Yeah, so it's the same thing here. An established downtrend. Right? 50-day declining, 200-day declining, year-to-date VWAP also declining. But price action's coiling up over here. So yeah, okay. Can we see a potential, break from these little tight contractions? Sure. But if the 20-day starts to curl around, you're still fighting the trend, right? You're still going to be fighting, going up against and fighting a trend here. So I typically try to stay away from stuff like this, unless if I'm seeing like a very extreme move, and I might fade it for a quick bounce. And that's about it, right? That's my style, but other people do things a little bit differently, and it works for them. So quick thought on HPE there. If I look at the weekly time frame, same thing. It hasn't gone anywhere for a very, very long time. This is a weekly chart, like dating back to 2020, right? It's been going sideways, and we're basically within that realm. And we're seeing, after a strong move down, we're seeing a little bit of a bounce back in a downtrend to sideways market. HPE, so Carvana, and then I'm going to pull up the charts to start getting my other stuff ready. Carvana, we do have earnings too right around the corner. Rising 200-day, declining 50-day. It is coiling up here, tightening up. I think that this one's also a tradable name, right? I'm not much of a fan of trading this stuff, because it's kind of like one of those like, hey, squeeze kind of plays. Like, it becomes in play for shorter time, but it's holding up pretty darn well in this market. Surprisingly enough, right? So it's kind of consolidating here sideways. And now if it breaks out, just note that it's also, you have the pull of the average, right? The average is pulling downwards. 200-day, right, is sloping up. So I don't know. This could potentially open the door to test lows, unless if it really starts to prove itself here in the near future and start to see this thing start to turn back around and maybe start breaking around this 230, and then it opens up the door to try to pop higher. So it's kind of in that neutral, a little bit dangerous state. If you go long now, where would a stop be? I'd be definitely looking at a stop down here, because if it starts breaking from here, it's following the more medium-term trend. And then the 200-day, right, if it starts flattening out and turning around, that could be a pretty nasty sign for something like Carvana. Monster Beverage. Let's look at Monster, and then I'm going to pull up Tesla in the last 10 minutes here. Coming to the final bill. We're going to get some movement here in the markets. Monster Beverage is pretty darn bullish. Yeah, we recently hit highs. We saw some volatility breaking through this today. 50-day inclining, 200-day, year-to-date above, 20-day above. So this is a name that I'd say keep an eye on. Look at the weekly chart. This chart, it's range bound on the weekly chart, right? Range bound on the weekly chart, and you can see we're hitting supply up in these areas, and it kind of dumps down. But if we can kind of doodle around the 60 area, this could be a big base breakout and potentially head higher. So this one should be on the radars for sure. A lot of these kind of caffeinated type beverages have been doing pretty good. Monster Beverage, KO, right? Look at Coca-Cola. I traded this down here. Boom, bam, nice break right here. This one's kind of a little bit all over the place now, but overall it's doing very good. And if it tightens up again here and the averages kind of catch up, I would love to see that for potential re-entry. But yeah, Celsius, Coca-Cola, there's probably some other ones, Monster Beverage. They've been doing good. They've been doing real good. Yeah, I'm going to pull up Tesla earnings here, the expected move. Yeah, I am going to be, I'm going to be live streaming basically the move, probably not the entire call or anything like that. I just want to see how the market reacts, responds. That's about it. Builder, BLDR. I haven't seen that one for a minute, actually. So Builder's kind of just been sinking off here. It's not the greatest sign. Builder's first source. A lot of these building, like home builders and stuff like that, also have an inverse correlation to yields. And yields have been kind of rising here. So maybe that does offer up a little bit of relief if yields come back off. But right now, it's just basically grinding these lows in a downtrend. So you have earnings right around the corner. We'll see what that brings. But right now, you have a declining 200-day, declining year-to-date VWAP, declining 50, declining 200. You'd be bottom fishing here with the hopes that it goes higher. So I think there's opportunities for swings and stuff like that. Maybe playing inverse correlations when they appear and they're strong. But right now, it's getting pretty tight. I would not short down here, that's for sure. I'm not interested in shorting at the lows because you might get pop-ups, but yeah, that would be my quick thoughts there. I did check GME. I did talk about that one already. If you want to just scroll back a little bit, it was already talked about. This is more of like a squeeze type play, right? I'm not looking to invest in this. It did consolidate here. It's above some key averages, so that's a good sign, but it's also been very choppy, been kind of all over the place. So if the markets free up and we start to get some moves in the small caps, perhaps GME could kind of help lead through that, but it is holding up fairly well from a year-to-date perspective, surprisingly. Okay, so I'm going to go ahead now, and I want to pull up Tesla, and I want to pull up the, well, first and foremost, when we do Tesla, we got to be in the Tesla vehicle. But I want to pull up Tesla and pull up the earnings expected moves here. I'm going to go ahead and clear my drawing set, refresh all of this stuff. And we're going to go ahead and we'll probably just kill some of these averages off. Just move this out of my way here for right now. And I want to go ahead and build out the expected moves. So we're going to go ahead and just draw some horizontal lines across my screen. Extend to the left, extend to the right. I didn't talk about two stocks that nobody mentioned, but that was TEM and App. Those were my last two trade ideas. We'll see how those are doing today. I do have a position in both of them. But once again, given the context of market conditions, I can't go like big sizes. So, it is what it is. Give me a moment here. Don't.
Just saying, traders circulate the latest market imbalance. That's 1.6 billion to buy latest market imbalance, $1.6 billion.
Okay, so about $28.70 of expectations for risk on Tesla. I'm going to go ahead and go to the smaller chart. I'm going to remove my vol range. $28.75, we'll call it. That's not quite at the market close yet, but whatever, that's fine. $28.75. I don't care about being off by a couple cents. All right, so as far as Tesla goes, we're looking at kind of a range of risk between 265, maybe a little bit higher, to 210. That would be one standard deviation, right? One standard deviation. So it's likely to tag one of those levels and potentially even exceed it to a 2 standard deviation move if the market really likes it or really hates whatever is going to come. So we can't rule those out as well, but that is what the current expectations are for earnings risk coming into the closing bell for Tesla. We got about 6 minutes left until they report. We got a Tesla 15-minute head and shoulders. Yeah, potentially. Yeah, exactly. Yeah, a little head and shoulders patterns below the declining 5-day. Honestly, I don't know if we can really like utilize that given the context of earnings, right? Earnings is going to move order flow very quickly, and a lot of things kind of go out the window. So the only thing that I have control of is kind of knowing what the market's pricing as far as risk goes. But if this was earlier in the trading session or earnings was not even today or tomorrow, like that would be something that I would be kind of looking at there. Okay.
And making your way in after hours trade today, we do have a couple of earnings we'll be keeping an eye out on. Due at 5 past the closing bell, we're due for Intuitive Surgical, ticker ISRG, EP expected of 173 and revenue of 2.18 billion. Also alongside this, we're expecting Capital One Financial, ticker COF numbers. EP is expected of 366 and revenue of 10.04 billion. And also out
so we
of
got
Europe,
Tesla, Intuitive Surgical. All right, you know what I'm going to do? I'm going to just do something.
And then, of course, past the hour, expecting numbers from Chubb, ticker CB, expected for 321 and revenue of 11.21 billion. As always, if you'd like the earnings estimates, they are available on the research suite of the website.
Oh, my stomach again. I haven't ate. I need to eat in phase.
And making you aware for the main earning after hour today, it is 10 past the hour. Expecting numbers from Tesla, ticker TSLA. EPS expected of 42 cents, revenue of 20.73 billion. Looking at some of the expectations for guidance, next quarter EPS is seen at
just bear with me for a moment here.
Next quarter revenue at 25.13 billion, while for the full year EPS is seen at 255 and revenue of 105.32 billion. So expecting Tesla numbers there at 10 minutes past the closing bell.
Come on. So I'm going to just do a bunch of earnings here. I didn't mean to do that. No. Ah. So we got surgical, end phase going to be reporting. Let me get Capital One Financial. Financials matter. So these other ones, not as important in my opinion. So let me look at Capital One. 1162 on Capital One. Yeah, that's pretty cool. Let's go 1170. Build that out. Send to the left, extend to the right. Duplicate this out. For those that don't know, I'm building out the kind of just visuals for expected moves. Okay, this is what the market's anticipating as far as risk goes. Going into these earnings.
Calendars do have it for 10 past in the main, but it's worth noting some do have it for 3 minutes past the hour. And looking at historical times of earnings release, it does also look like it could be at 3 minutes past. Just making aware that
wow, that's a big move for end phase.
9:03 London time or 4:03 Eastern. rather than that 10 past one that is on the majority of calendars.
That's a big expected move for end phase. Oh, sorry, my bad. That's not it. 691. I was wondering what was going on there. I was looking at Capital One. Can I make it in time to do all of these? Duplicate. Ba-ba, ba-doom, 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 doom. All right, cool. There's in phase. We got SAP. SAP. Do I even need this? 2387. What else is earnings? Steel Dynamics, Baker Hughes, Range Resources. I mean, all we care about really is Tesla. I mean, these I like Capital One here.
And of note for
ISRG
automakers
too is
such
pretty.
as Ford and General Motors, according to a letter, auto industry urges Trump
I'll just pull
admin
up
not
SAP.
to impose new tariffs on auto parts, saying it
2387.
will lead to higher prices and lower vehicle sales.
Was supposed to just be looking at. All right, people. Here comes the closing bell there. And you get these earnings here amongst these companies. All right, the main one is going to be Tesla right here above my head. This one behind me doesn't really matter. We got ISRG reporting right now. I'm just reading chat right now. Tesla people right here. We're watching for Tesla. He said about 3 minutes after the bell, apparently. I don't necessarily know if that's true or not. ISRG is up slightly here in the aftermarket. So I believe that they may have reported here. Big one that we're watching here is Tesla. We have Capital One Financial. We have Enphase. We got SAP. I think I might just zoom in, Maxis sell out, and maybe we'll kind of scroll around. I mean, the main one is Tesla here, so that could be the market mover, right? All right, so here's Tesla. This was a lot of move today, right? We're up 4.6%, but look at, I mean, we could be up 12%, or we can be down 12% or 12 to 13%, right, from where we currently are. This is the market's expectations of risk. Implied moves. Dubs, the way that I pick this up is by looking at the options chain. It's easy for me using Thinkorswim, but you can use any options chain. You look at the near-term strike, and you look at the at the money strike, nearest expiration at the money strike. You calculate the ask of the call and the put, and it gives you a rough estimate of expectations for the market. I have a video on it too. If you just do like figuring out money expected moves, you'll be able to find it. I gotta vandalize the Tesla. Maybe just, maybe if I just doodle like a cracked windshield or a, I don't know, something like that. Saying, figuring out streaming. COF acquired Discovery Financial. Really? Capital One, still waiting on that. Still waiting on Tesla. Is it Tesla or is it Tesla? I've heard Trump, or sorry, not Trump. I've heard Elon Musk say Tesla, but I hear other people say Tesla and also Tesla.
For those Tesla
I don't know.
numbers.
Looking out for the Tesla numbers. Tesla. Zoom. We got a big stream going on right now. 1,300 people on the stream. Tesla. Tesla falls, will likely take down the whole consumer discretionary sector. I mean, Tesla is a big portion of XLY. XLY is basically like two names as far as like the holdings go. But then again, order flow can drive the entire market, right? People are on pins and needles here. Not us. I know where risk is going. At least I know what the market's anticipating as far as risk. People are pretty, from what I've noticed, a lot of people are pretty bearish Tesla. That's what it seemed like to me.
Just await those Tesla numbers. Just seeing numbers here now from Intuitive Surgical.
Oh, there's Intuitive
adjusted
Surgical.
EPS of 181. That's above the expected 172.
There's
Revenue, that's
Intuitive Surgical
2.25 billion, also above the expected 2.19 billion. And separately of note 4, Oklo, ticker is the name. Sam Altman is stepping down from chairman, should I say.
Ooh, Oklo, that's not good news for Oklo.
Currently down some 12%.
Oklo coming off. News around Sam Altman stepping down. All right, Tesla. Trying to catch a little bit of a move here.
And seeing numbers here now from SAP. They do report adjusted EBIT of 2.46 billion. That's against the expected 2.23 billion. Adjusted EPS, that is 144. That's against the expected 128.
Still waiting for Tesla. I don't like seeing it spike up like this.
US listed Capital One now. It does report net income of 1.4 billion. It reports EPS of 3.45. That's against the expected 366, so that one is light there. Does report revenue of 10 billion. That's against the expected 10.06 billion. And seeing numbers now from Tesla, they do report a adjusted EPS of 27 cents. That is shy of the expected 43 cents. They do report operating margin of 2.1% and gross margin of 16.3%. And they do note they will revisit their 2025 guidance in their Q2 update.
There you go. There's
and
earnings.
The revenue figure for
Didn't sound all too great.
19.335
They're going to revisit guidance.
billion. That is also shy of the expected 21.111 billion. So that is a top and bottom line miss there for Tesla. And it does note difficult to measure the impacts of the global trade policy.
Yeah, watch it stay pinned, just not do anything. I think the market's going to be really kind of waiting to see what all the guidance looks like, and then what Elon might say during the call. But so far, not good.
Commentary here from Tesla. It does note it plans for new vehicles, including more affordable models, and remain on track for start of production in the first half of 2025. And the current tariff landscape will have a relatively larger impact on the energy business compared to automotives. And just looking at Tesla in after-hours trade, they're currently down by 0.5%.
Wow, this is exciting. Very likely between today and tomorrow we come get one of these moves. So I still expect a large move here.
It does note continued progress on installation of lines for Tesla Semi in Nevada and Cybercat in Texas. Both remain on track for volume production next year.
Dude, Elon's definitely going to say something about something. Like he's been typically on like the last couple of calls. What has he been saying? He's been saying it's going to be like a 3, 4. It's going to be the biggest like market cap name and so forth, right? There's been I remember it was like a few earnings ago when he originally did that. Yeah, earnings miss. I think that was kind of expected. I think that was more on the expectations. Now I think the guidance and what he might have to say will kind of change things. Let's take a look at a couple other names. This is kind of just doodling around here, holding up, but
further from
I mean,
Tesla, it does note
there's still a lot of risk here.
Launch of FSD in Europe this year, pending regulatory
Intuitive
approval.
Surgical, that one's down by its expected moves as it stands right now. We got Enphase reporting.
On track for pilot launch of Robotaxi in Austin by June, and builds of Optimus on their Fremont pilot production line in 2025.
SAP holding up. Capital One Financial is one that we're going to wait for here.
And just seeing some of the other metrics here for Tesla now, they do report Q1 free cash flow of 664 million, and is also shy of the expected 1.08 billion, making it a very choppy trade for Tesla after hours, but now down roughly 0.7.
That's pretty impressive to only be down that much. Bad news, good news? No. We'll see. We'll see. I expect this thing to get cooking. Whether that's after he talks or tomorrow.
Quickly,
it's going to be a stock that a lot of traders are watching.
Amazon and Walmart sellers do hold goods in Canada to wait out tariffs.
Close out some of these. All right. Yeah, we got 1,500 people over here in the YouTube stream. Probably, is there a lot of new viewers here to the channel by any means? By any chance? I do like to do live streams on occasion here, but we do do the stock market brief. So if you haven't done so already, make sure to subscribe. We give market updates and so forth. I'm listening, Blackbeard, I'm listening to that feed through Thinkorswim news feed. It's actually a free way to get a live news feed. If you have a brokerage with Schwab now,
around these Tesla earnings, looking at Bloomberg in particular at the moment, they know
you don't use professional
Tesla
data.
Leaves that return to growth forecast from earnings reports.
Great tool is Thinkorswim, and then you could go into the chat room up here, and you could click Global News and hit Listen. It gives you News Squawk.
And now seeing some metrics from Chubb. They do report net income of 1.33 billion. They do report net income per share of 329.
Just go to the chat rooms, Global News channel, and then hit the little square that says Listen at the bottom right.
12.6 billion. That's up 5.7% in constant dollars. Just looking at that.
Yeah, it's not a great earnings so far for Tesla, but I mean the price hasn't moved yet.
That's shy of the expected
I think it's going to though.
3 billion. Operating EPS
take a look at some of the other names here.
368, somewhere above
Intuitive Surgical there. Enphase is down at its expected move. Intuitive Surgical is at its expectations for risk.
12.52 billion.
Oklo did not report earnings, but Sam Altman stepped down. That's why I brought that up. SAP, it looks like it is coming towards its upper expected move. And then we have Capital One Financial. I believe that I just heard something about it being reported here. No, I don't think I did yet. I could be wrong. Slightly up in the after hours. It's pretty cool, right, Blackbeard? Pretty cool stuff. All right, y'all. I'm not really going to sit around for the call. I only really cared what the market did as far as flow goes. I'm not going to be trading it up. Hey, what's up, Eco? We can pull up HIMS. Yeah, that's fine. I would fully expect this to take place. Tagging or tagging. Whether that's when Elon talks, because I think that the market's kind of pinned here, waiting for Elon to say something. I don't know. I have some weird feeling now. Everyone kind of has the same feeling that like they're going to be mentioning something about the Doge and potentially stepping away, and that could be a good thing for the market. But now, like, a lot of people think that. So now I'm thinking, oh man, like, I don't know. All I know is this, not the greatest earnings, and it's holding up right now. That's a positive sign. So we'll see what they say. But whether it's tomorrow or after he talks, the expectations of risk, if you think of in terms of a distribution curve, we're coming for 265, 270, or we're coming down to 210 or lower, right? That'd be one standard deviation move. That's what the market anticipated. As it stands right now, we're well within that risk parameters, but it's very likely to get pulled in those directions. Because if you think about it, if you look at the options chain, you look at the strike and all the activity, right? If you look at
regarding some clarity around that headline regarding Tesla leaving out return to growth, just worth noting.
If you look at all the
last report,
if you look at all this activity here in the options chain, right? You got some above, below,
left that one
and it's you get all these orders here and all these orders up here, all these orders down here, all these orders down here, and it's pulling to these levels, right? So this is what the market is averaging out, is anticipating as expectations for risk, and there's a high likelihood that we get pulled to one of those levels. or exceed it, right? That would be known as a multiple standard deviation move. Okay, that's all I got, guys. Unfortunately, it wasn't a big move right out of the gate. I don't think anybody called for Tesla to just not even move, you know, before earnings. But we got it. It wasn't that great, but it held up. I'm not going to jinx it here, but that's typically a good sign if you get some bad news and it holds up. It's not horrible. It could turn into horrible, but you get my point here. Hope everyone enjoyed the stream, saw some key levels. I did mention that I would look at HIMS really quick, so let me pull up HIMS for you. My bad. I'll do that really quick. HIMS. Okay. HIMS. It doesn't look great. It looks kind of like on the brink of breaking down here. So I'd be careful with HIMS. I think wasn't there some news around Eli Lilly getting back to their GLP-1 or something like that when they kind of shot up to the upside. I don't feel like that would be that great for HIMS having that news. But I don't really understand that stuff. I'm not going to pretend to understand it. But I do know that HIMS, to me, there was something off about it. And there was some good setups, but I was so off put by some of the stuff that I was just like, I'm not even going to bother trading this. And I missed a big run. It faded, but you know, I missed a big run. But right now it's just kind of holding on here underneath some of these key averages. So it's kind of a step away from me. And if things change up, right, cool. But right now, you know, I feel like there's other places for my money to go. All right, everyone. Appreciate y'all being here. We're going to tune off here. See you, Old Testament. See you, Wolf Banter. See you, Eco Comrade.
Space of note for Bristol Myers Squibb, ticker BMY. It does announce top-line results from phase 3.
See you, Dubs. See you, Remy, Roberto. Blackbeard, Cough.
Adjunctive treatment to
House of the Rising Funk.
Antipsychotics
and phase. Whoopsie daisy. No qualms. Thanks for the hearts there on the feed. If you liked it, you know, do so. And if you haven't subscribed to the channel, and it's free to subscribe to my channel. Check out some of my market briefs where we kind of dive into some cool stuff in the markets. I always try to find some interesting data. Curtis, Bandit, Blue, everybody out there on Twitch too. See you, DD, see you, Sean, see you, Barkster, see you, Juan, Palm Tree, Exotic, Coop. Thanks for tuning in and hanging out with me for a little bit. I have to be honest, man. Trading is a lonely game, so it's nice when we kind of hang out and just chill out, you know what I'm saying? Trading office. All right. Officially signing off. Toodaloo.